Hi everyone, it's Ida Walsh, and today we're going to be talking about silver divorce. So there are different ways a reverse mortgage can actually help during a divorce. And you may or may not know much about reverse mortgages, what it is and how it works. But I wanted to invite Bob Adams, who is a reverse mortgage specialist, with us today so that he can at least explain how it works and how it could be a lifesaver in certain situations. As with every video that we do, please make sure that you check with your financial advisor and your tax accountant, and Bob actually welcomes them to make sure that it's going to be a lifestyle changing or an opportunity for you to make your life better. So during divorce, obviously.
I work with a lot of financial advisors, and most of them are more familiar with reverse mortgage these days and bigger fans of them because of the recent legislative and regulatory changes that have made them much safer than they ever were. They were always safe, but there's a lot of misconceptions out there about them. So we want to make sure that you get good information to make decisions about, and how they, and this specifically, how they apply to a divorce in our golden years, if you will. We call it silver divorce. And, you know, divorce is tough enough in your 30s or 40s, but try it in your 60s and 70s. It can cause some issues that we hope we can show you some possible solutions to.
As a matter of fact, I was just reading on here, the breakup rate for married Americans aged 65 and older tripled between 1990 and 2015, according to a survey from the PUW Research Center. So we'll have a link on that as well. So that just shows, you know, breakups happen every day. Obviously, everybody knows the rate of divorce, and when you're going through it, it doesn't feel like everyone goes through the same thing. But obviously, there's struggles, and there are different ways that you can handle when a home is involved in a divorce, right? So if you own a home jointly, then you need to decide, are you going to sell the property, or can one spouse stay in the property? So we're going to discuss that with Bob here today, as far as how you can leverage reverse mortgage to help in certain situations, because obviously when you're a little bit older, your income is different, and you know, obviously there's going to be some different scenarios. So the first one, Bob, I want to go over with you is if the owners want to sell their property and they want to split the money, what are some of the options?
Well, that's first. Let me first say to emphasize what you were saying, Ida, about the growing issue of silver divorce. There are now lawyers, full associations of lawyers who specialize in silver divorce. I have access to them, and I've talked to many of them. You might, there was a Washington Post article just a month or two ago that spelled out this silver divorce issue. And there's a lot of different ways that with your lawyers, you can make life a little bit easier for silver divorce folks. Anyway, you asked about the one scenario where both spouses, neither spouse wants to stay in the marital home, okay? It's a situation where they're saying, okay, what we're going to do is we're going to sell the house, you get this and I get that, okay? Mm-hmm. Now, each one of those divorcees is faced with the problem of, how do I maintain my lifestyle with half of the value or half of the equity of the home that we've been living in for 35 or 40 years? How am I going to do that? I'm not going to be able to put all cash down to own a $500,000 home if I only have $250,000 in cash from the divorce settlement. I'm also not going to qualify, if they're being realistic, unless they're unusual and they're still earning a lot of money, because banks are looking for income in order to lend money today. I don't care if you have an 820 credit score. If you don't have the income to support a loan, you will not get the loan. So they're faced with a problem. Each of them is holding, say, $250,000. they don't want to downgrade and go buy something less than they're going to be comfortable living in. There's enough emotional pain from divorce without having to lower your sights about where you're going to live the rest of your life. It's a very tragic situation for many people. So in comes the HECM for purchase plan. Each spouse now has a certain amount of money in their hands, and let's call it $250,000. And let's say they're each 65 years old. Well, my company, Retirement Funding Solutions, through what's known as an H for P, or HECM for purchase, can come to the settlement table. Let's say it's a $400,000 home that they want to live in. They found something they'd be comfortable with, but my goodness, how am I going to buy it? I've got $250 and I'm getting Social Security and a little pension. My income's $2,500 a month. You know, I wasn't expecting to have to deal with this. Well, if you find a home for $400,000 and you have $250,000 in hand, you can own that home in your name and never, ever have a monthly mortgage payment as long as you live there. Okay, that's called the HECM for purchase. What happens is my company, Retirement Funding Solutions, comes to the settlement table with the other $150,000. Or in this case, we could probably come with 170 or maybe a little bit more. So you'd keep a little bit of cash in your pocket as well. So each spouse could do that, okay, if the scenario is that, hey, I'm not going to live here, you're not going to live here, we're going to sell this house and split the proceeds. Each one can buy a decent, dignified place to live with just the cash they have. They don't have to pay it all, and they don't have to get a regular mortgage and make payments.
And one of the things that I want to talk about, which we covered in the other videos, but we haven't covered it in this one, is the qualification for a reverse mortgage is easier than a regular mortgage. So that would also help.
Thank you. Yeah, that's why I mentioned that income issue. When you're 65 or 70 years old, most of us have a lower income than we did, especially if as a married couple, you can combine your income, okay? But when you're divorced and buying something on your own, very difficult to qualify. You know, the vast majority of people are going to have a very difficult transition with that. And it's a shame that more people don't know about the HECM for purchase solution. So that's one scenario where the marital home is sold, each has cash, they can each go buy a decent place to live and never have a mortgage payment for the rest of their lives.
Right. And then the second one is where obviously during a divorce situation, if one of the spouses wants to stay in the home for one reason or another, you know, and the other one wants out or wants the money or the equity in the home, right, Bob? So that could be another scenario where reverse mortgage or the refi with HECM would help.
That's right. And this is, as you said, Ida, this is a scenario where one of the spouses says, I don't want to leave this place until you take me out feet first. I can't tell you how many times I've heard that. In fact, I heard it from my own father. But I hear it all the time. This is where I've been for 35 years. My neighbors are here. My friends are here. I go to the shopping center here. I don't want my life disrupted. I want to stay here. So, but the lawyer says, you know, you owe the departing spouse a certain amount of money out of the equity in that house. Well, here's the scenario. We can use a HECM refinance on that marital property and pull out a lump sum of cash. If there's enough equity and we go through the qualification process, I can tell people in 5 minutes whether this is doable. It takes a lot longer than that and consultation with other advisors to say whether it's appropriate and suggested. But if there's enough equity in the house, we can do a refi, get a lump sum out, and that becomes part of the settlement to the departing spouse. So in this case, the departing spouse has a lump sum of money in their hands. that they can go shopping with. Now, do they have to pay 100% cash? No. In fact, it's not recommended even if you could in most cases, depending on your scenario, your situation. But to flesh this one out, let's say again that there's $250,000 in hand, one spouse, for the departing spouse, one spouse is in the marital home, which now has a reverse mortgage on it that requires no monthly payment, okay? The departing spouse takes that $250,000 and goes shopping. And hey, if anybody remembers this, please ask me for the Jack and Jill video. It's a little cartoon video that expresses this particular situation. Well, actually, it expresses a couple buying a house, but it's a great, great intro to the HECM for Purchase program. Just remember to ask Ida or myself for the Jack and Diane video. Two American kids growing up in the heartland. Remember that song? Anyway, so the parting spouse can go find, say, a $400,000 home, put down a large portion, not all of that 250, and the reverse mortgage company, my company, will come to the table with the rest of the money to purchase that house. It'll be in that departing spouse's name. It's just a lien at the courthouse, just another mortgage, but there's no monthly mortgage payments for as long as you live there. So it's a tremendous way to split marital assets so that each spouse lands on their feet. And I want to bring up one other thing about this silver divorce situation. Please know about these options, because otherwise, typically, and not a lot of people know about this, more and more elder law attorneys and financial advisors are aware of this. But bring me in and let me offer, at least mention this option, to your divorce lawyer or your financial planner. Because most people, if they're going to buy another house, whether it's the first scenario where both spouses are out shopping with their half of the cash, or where one spouse is staying in the marital home and the other is out shopping with their chunk of cash, okay? Instead of going to your financial advisor and decimating your portfolio because you've run into a bad circumstance where now you're forced to buy a $400,000 or $500,000 house and you don't have enough money to do it, and you can't qualify for a mortgage because you're 68 years old and your income is $3,000 a month. So you go to your financial advisor and you say, I need, another $300,000 out of my portfolio to buy a home that I'll enjoy living in, okay? I don't have any choice. I got divorced. I wish I hadn't, but that's what it is. So what happens when you go to your financial advisor over the last 2 or 3 months when the market has sold off very significantly? Is that a time when you want to go and sell off some of your portfolio at these low prices? Okay. Or here's another scenario. If you have to go to your portfolio, if you're fortunate enough to have a substantial amount of money saved up, which only a small portion of Americans have, but if you're one of those people that does, and you go to your financial advisor and you say, well, I know it's down 11% right now, but I bought it way back when, so I'm still going to make plenty of money. Well, what does that mean? Can you say capital gains tax? Okay, so here's an alternative that makes a lot of sense when we sit down and look at your situation, where you don't have to go to your portfolio when it might not be advantageous to do so. I can't think of a worse time to be selling than right now. So let's use home equity and let's use a HECM for purchase to come to the table with the cash that you need. And you'll never have a monthly mortgage payment. Just pay the taxes, insurance, and homeowners association or condo fees.
And there are lots of different, like there's one that from Washington Post, also from Chicago Tribune, etc. There are some specific articles that give great examples and scenarios. For example, Washington Post article has one here where, you know, this is a fictional scenario involving a divorcing couple in their 70s. And the husband wants to move out of the home, but the wife wants to stay. And it's a $600,000 property, but they have a $200,000 mortgage. So, you know, it just goes on to talk about, you know, how can a reverse mortgage help with that? So we're going to put a link on that article in this website or this page so you can take a look at it. But there are just different scenarios. And I think the best way to really know if it's going to be a good scenario for you or not is really, first of all, see if you even qualify. Give Bob a call to see if you qualify first, and then explore that option, whether that is just for yourself or for you and the spouse, or, you know, something as part of a settlement. You know, some attorneys may not even know about this, but that can alleviate a lot of stress and a lot of heartache. And
yeah, a lot of attorneys are not familiar with this. But I'll tell you, I mean, how could I possibly be up to snuff, if you will, on all the things that a divorce lawyer needs to know? Okay, if you came to me to handle your divorce, you'd be in big trouble. Okay, and so we each have our specialties and our bank of knowledge to apply to make our senior citizens' lives better. So use those resources, find out what's out there, and don't believe myths and misconceptions. Get the facts, and that's the most important thing that I can do for anybody, whether it be the homeowner or divorcee themselves, or the lawyer or financial planner, that I can, you know, put more tools in their hands.
Yep, absolutely. And you guys know, you know, my videos are all about knowing your options, exploring those different options, because unless you educate yourself in what is available out there and what would work great for you in your specific scenario, then you're more well equipped to understand, you know, impacts of those actions or not taking those actions, but at least you know what your options are. And even if it's not a perfect option for you, it could be a perfect option for somebody, you know. So I hope this video was beneficial. Check out our other videos. And Bob, thank you again for spending the time and energy today and sharing your knowledge on reverse mortgages. We're going to put Bob's information on our website, but go ahead and let them know about your contact information, Bob, as well.
Yeah, it's you can get Bob Adams by calling my cell phone, which is with me all the time. I got to deal with the carrier that it rings 24 hours a day, and if I'm awake, I'll answer it. Okay, it's 703-475-1555. You can also learn more about these things and about me at reversemortgagewithbob.com. reversemortgagewithbob.com. And my email address is badams, ADAMS, at rfslens.com. That's for Retirement Funding Solutions, rfslens.com. Thanks. I hope to hear from some of you.
Make it a great day.